So you're eager to begin your investment journey, and you've managed to save up some money. Perhaps you've heard about Bitcoin on a few occasions, and it has piqued your interest. Maybe you've even come across stories of people making a fortune by investing in Dogecoins or Bitcoin. Of course, those who bought Bitcoin a decade ago are now sitting on huge gains. Fun fact, a $1,000 investment in Bitcoin exactly 10 years ago would be worth approximately $300,000 today. That's a 300% increase in a span of a decade. However, if you're new to investing in cryptocurrency, even simple tasks like purchasing your first Bitcoin can seem like a difficult thing. There's always that little voice in the back of your head saying, "What if I lose all my money?" Well, today on Finance Spur, we'll be giving you a step-by-step guide on how to earn and how to start investing. But for more videos about finance, technology, and business, don't forget to hit that like button and subscribe. But before we continue with the guide, what is Bitcoin or cryptocurrency in the first place? Bitcoin is a decentralized digital currency that operates on a peer-to-peer network known as blockchain. It was created in 2009 by an anonymous person or group of people using the pseudonym Satoshi Nakamoto. Unlike traditional currencies, Bitcoin is not controlled by any central authority, such as a government or a central bank. Instead, it relies on a distributed ledger technology to record and verify transactions. Bitcoins are generated through a process called mining, where powerful computers solve complex mathematical puzzles to add new blocks to the blockchain. Bitcoin transactions are pseudonymous, meaning that users are represented by their wallet addresses rather than personal information, providing a degree of privacy. It has gained popularity as a store of value and a means of transferring funds across borders, and it's often considered a digital counterpart to gold, with a limited supply of 21 million coins. Bitcoin's value is highly volatile, making it a speculative asset and an attractive investment for many, as it has demonstrated the potential for big price appreciation over the years. Now, let's break down the steps on how to get started with crypto investing as a beginner. First, let's address why you should invest in cryptocurrency. There are several reasons people choose to invest in this asset. Cryptocurrency is highly volatile, offering the potential for high returns and rapid growth. People enter the world of crypto with the goal of making huge profits. Additionally, the traditional financial system has left many people doubting whether they can rely on it for their financial security. With inflation eroding the value of money over time, putting your money in a regular savings account isn't a viable option. In today's world, investing isn't a choice. It's a necessity. You can definitely invest in various assets, including rare art, real estate, stocks, bonds, and cryptocurrencies. The key is to choose something that can beat inflation and, ideally, provide big returns and profits. An investment involves putting your money into an asset that will yield a return, either through selling the asset or receiving dividends. Now, you might be wondering how much money you need to start investing in crypto. The good news is that you can start with any amount, and you don't need a large sum of money. Whether you have a few $100s or several thousand, it's perfectly fine to begin your crypto investment journey. The crucial factor is to start slowly and learn about the asset class before committing huge amounts of money. The temptation to go all in on crypto can be overwhelming, but it's essential to resist that temptation. Never invest more than you can afford to lose. Ask yourself, if I wake up tomorrow and my wallet has been hacked, will I be okay? If the answer is no, you're investing too much. Third, the timing of your investments is critical. For a passive approach, consider dollar cost averaging, where you invest a fixed amount at regular intervals, regardless of market conditions. This strategy is suitable for long-term investments. If you have a huge amount to invest and want to do it quickly, it's best to buy when the market is down and fear is high. Avoid buying at new all-time highs when greed prevails, as this is a high-risk, low-reward time to invest. Next is determining how much of your portfolio should be allocated to crypto. It depends on your financial situation, portfolio size, and risk tolerance. Keep in mind that crypto investments carry inherent risks, so you should avoid overexposing yourself to those risks. Diversifying your profits from crypto into other assets like stocks and precious metals can provide stability and risk mitigation. It's important to maintain a diversified portfolio that suits your financial goals. It is also important to understand the nature of cryptocurrency. Cryptocurrencies are intangible digital assets that do not provide ownership rights to protocols like stocks. They are subject to different tax treatment than traditional assets. It's important to know that cryptocurrency is not a stock or a traditional asset, but rather a unique digital asset class. Next is choosing the right cryptocurrencies for investment. Now, this can be a complex task, but we got you covered. Now, there are different categories, including Bitcoin, Ethereum, and altcoins. Bitcoin, or BTC, is often seen as a secure investment, known as digital gold due to its stability. Ethereum, or ETH, is a versatile cryptocurrency and platform for decentralized applications. Altcoins vary in risk and reward, with big caps being relatively safer, mid caps offering a balance, and small caps carrying higher risk and potential rewards. When selecting altcoins, consider factors like partnerships, practical use cases, and community support while avoiding meme coins or tokens lacking clear utility, which are often driven by hype and speculation. Now, with all these steps, you want to buy your first cryptocurrency, right? Now, to start investing in cryptocurrency, you'll need to open an account on a cryptocurrency exchange. We highly recommend Kraken if you're in the USA or Canada, and Binance for users around the world. These exchanges offer a wide selection of cryptocurrencies. After signing up, you'll need to complete KYC or Know Your Customer verification to comply with legal regulations. Once your account is verified, you can deposit funds via a credit card or a wire transfer. The process is similar to buying stocks on a brokerage platform. However, the key difference is that you can withdraw your crypto from the exchange and store it in your own wallet, giving you control over your assets and protection against exchange-related risks. But before you buy your first cryptocurrency, let us show you how to make money. In the world of cryptocurrency, there are various ways for potential financial gains. One common strategy is buy and hold, where investors purchase cryptocurrency at a low price and sell it when the market value is high. Success in this approach involves mastering the art of market timing, understanding market sentiment, and being proficient in technical analysis. Another method to earn returns is through staking, which is particularly frequent in cryptocurrencies like Ethereum and Cardano. Staking requires locking your coins in a wallet to support network operations and, in return, receiving staking rewards. Furthermore, the realm of DeFi, or decentralized finance, presents an opportunity to generate income by engaging in decentralized financial protocols. DeFi allows you to earn fees for providing liquidity to these platforms, potentially resulting in substantial returns. However, it's essential to be aware that DeFi investments carry heightened risks, including the ever-present threat of security breaches or hacks. Regardless of your chosen strategy, it's important to emphasize the importance of profit-taking in the crypto space. Knowing when to sell your assets to realize gains and prevent potential losses is a crucial element of a successful crypto investment journey. It's a practice that can safeguard your hard-earned capital and help you capitalize on the volatile nature of the cryptocurrency market. Now you know how cryptos work. Just beware of scams or people trying to take advantage of you, and you're all good to go. But for more amazing videos about finance, technology, and business, don't forget to check out our channel. Also, don't forget to subscribe and click that notify bell for upcoming videos. For now, this is Finance Spur. Have a great day.